Hello, I'm Brent Stafford, and this is the Weekly Market Wrap-Up, brought to you by Crush the Street and Viral Network News. The U.S. equity sector bounced up on Thursday following Wednesday's soft performance. Overall, the markets added more points on top of last week's record-breaking move, largely driven by the S&P 500. Markets were buoyed by a positive trending earnings season and continued speculation that the Federal Reserve will keep the QE taper off the table for the foreseeable future. The elephant in the room continues to be the poor jobs growth curve. Earlier this week, the Labor Department released the September non-farm payroll report, which revealed that only 148,000 jobs were created, which is well below the street's expectations. While this has fueled the non-taper speculation, the fact that the markets are moving only based on the promise of artificial liquidity creates a dangerous situation when the real performance of the economy is so fragile. However, measuring the real performance is up in the air due to the federal government shutdown. The September jobs report was more than 2 weeks late, and October's report is expected to drop at least a week late in November. One reason the Fed is likely to wait until early 2014 to begin QE tapering is that policymakers there simply won't know if the labor market is gaining or losing strength before then. Accurate data will just not be available. Not until December will the monthly job survey be free of the shutdown static. And that report does not drop until early January. And by then, well, it could be Groundhog's Day.
We fought the fight. We didn't win. We lived to fight another day. And the fact is that we're going to have issues about funding the government come January 15th. We're going to have the debt ceiling we're going to have to deal with again.
While the Federal Reserve has been trying to promote growth, some in Washington appear to be, at least to me, working in the opposite direction. In my opinion, Republican leadership needs to shape up and stop talking shutdown and threatening a default on the full faith and credit of the United States. Do you disagree with me? Well, tell me why in the comment section below. All right, let's talk currencies. The Forex markets continued their overall trajectory from last week. The US dollar index struggled to find footing, never hitting past the 80 level, and Thursday's price action took it down to 79.2, a 9-month low. The dollar-yen pair also struggled due to a weaker dollar, pushing up yen evaluation. This capped upside momentum of the Nikkei 225 index. The euro-dollar continued its surge from last week, acting as a safe haven currency. It managed to hit a 2-year high, although recent trading activity suggests the momentum is waning. Well, that's it for currencies. Let's turn now to winners and losers and our picks for the week. The winner for this week is Royal Gold Inc., ticker symbol RGLD. Share prices are up nearly 4% against the prior week as a resurgent gold market is fueling a rally in the miners. While the percentage increase in share valuation is not nearly as impressive as some of the hot gainers of the week, Royal Gold will benefit from fundamental tailwinds. It also is one of the strongest companies within the basic materials subcategory, posting net margins in excess of 250% of sector averages. Well, the loser for this week is Parker Vision Inc., ticker symbol PRKR. Shares dropped over 59% against the prior session after damages awarded in their suit against Qualcomm came in much lower than expected. The impact that this judgment could have is severe, as Parker Vision has been running net income figures into the red on both an annualized and quarterly basis. Furthermore, the company has a very poor cash flow to liabilities ratio. Well, those are our winners and losers for this week. Now we want you to weigh in. You tell us in the comment section below what company you think is the top pick and the top stinker for the week. Finally, let's wrap it up with precious metals, which continued their impressive recovery that began last week. Gold is sitting on top of a key technical level at $1,350 per troy ounce, while spot silver is about 1% away from securing the $23 mark. Both metals should continue on a positive trend as the Fed is incentivized to sustain its inflationary policies based on a weak economy and lack of confidence in Washington, and of course the lack of data we spoke about earlier. Palladium traded over the $740 mark for most of this week, buoyed by a weaker dollar and higher demand from the automotive industry, which represents the greatest industrial usage for the metal. As the automotive sector continues to be one of the bright spots in the domestic economy, we can expect palladium to move higher along with the other precious metals. Well, that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for that last October weekend, make sure you subscribe to our YouTube channel and find us on Facebook and Twitter. For Viral Network News and Crush the Street, I'm Brent Stafford.